Hey traders, Gavin McMaster here from Options Trading IQ, and today I just want to give you a quick update on a cash secured put on PLTR that we looked at a couple of weeks ago. Before we do, just a quick reminder that everything discussed is for educational purposes only, is general in nature, and does not take into account your personal circumstances. So I've loaded the original position up into OptionNet Explorer, which is awesome for back testing or tracking trades. So it was the 2nd of May was the trade entry. It was actually 1st of May in America. This is sort of Australian time, so just at the market close. And we looked at selling the 22 strike put. Stock was trading at 22.12. Earnings was coming up, so you can see IV is hugely elevated there. We were trying to take advantage of that high implied volatility around that earnings announcement. You can see the payoff graph here. So it was a pretty short-term trade, only about a week till expiration, and generating about $155 in premium, so in a short space of time. At the time, we looked at my little cash secured put calculator here that I have in Excel. So we put in the stock price, the expiration date, the strike price, the option premium, number of contracts, and that gives us our margin for error, our decrease to our break-even price, and also our annualized return, which is obviously quite large because it's a very short-term trade with very high implied volatility. So let's move forward and see how the trade worked out. So if we fast forward to the expiration day, which is actually the Saturday, you can see the stock did drop down to 20.60, so below the strike price that we sold the put at. So that gets assigned. We have to take ownership of 100 shares. So to do that in OptionNet Explorer, what I can do is just basically close out the put by doing the opposite. We buy the 100 shares and commit trade. Then within the trade log here, I'll just change that price because we have to buy the shares at 22. And that basically gets closed out for 0. So you can see we're long the shares now, basically around break even on the trade because it did drop, but it stayed around our break even price. Now, what we did from here is we went out to June expiration and we turned it into a wheel trade. So basically, we went out to the main June monthly expiration. We sold a call option at our original exercise price. Sorry, that should be negative. And we sold another put below. We were willing to take ownership of another 100 shares down at 20. So we sold a put down there. So we generate about $65 in premium for that and about $76 in premium for selling the put. We commit that trade, about $140 in total premium for selling those two. And that becomes our new trade. You can sort of scroll across there and see how that looks. We'll minimize it as well so you can see a little bit better. Break-even price now is all the way down at $19.50. We've got about $300 in profit potential if it gets back above 22. So let's fast forward to a couple of days ago and we'll just see how the trade is looking now. You can see there the stock's rallied all the way back up to 25, basically a full profit. Those 100 shares are going to get called away. The put option is going to expire worthless and we'll be left with a flat position. So pretty nice trade, 24% return on capital at risk in about a month and a half. So that one's worked really well. I'll post a link below for a tutorial on how to use OptionNet Explorer. It's really awesome for doing stuff like this when you're looking at trades like this. So that one worked really well. There is one at the moment that isn't going so well. So I want to walk you through this one as well. This is on EWZ. We actually started this last year. So back in December, the stock was up at 35.60 and it's since dropped nearly 24% all the way down to 27.06. So certainly not ideal. When I get into a wheel trade that gets a little bit more complex, sometimes I like to visualize it in Excel as well. So I've got this little tracker that I use. Basically, there's our initial cash secured put for February expiration. We sold that at 35. That then gets assigned. So we have to buy the 100 shares at 35. We sold a 32 put and a 35 call for April. The 32 put ended up getting assigned, so we bought another 100 shares at 32. Then we sold a third put down at 29, and we sold 2 calls up at 35. And also here we received some dividends. So if we just do some quick calculations, you can see the stock's down about 24%. We're only down about 9.5%. So we're down, but it is outperforming. And if the stock starts to bounce back, that's where we'll start to really see some outperformance and see this trade turn back into positive. So a few little calculations that I do. Firstly, just quickly looking at the net or the gross cost basis of the shares that I've bought so far, which is basically 33.50. And then to get back to break even is around a 24% return that we need the stock to rally. Now, I will also look at the net cost basis, which is the amount that we've paid for the shares, and we'll add in all the option premium and dividends that we've received as well, divided by the 200 shares that we own. So that's our net cost basis. If the stock gets back to 30.48, we basically get back to break even on a net basis. So that is only about a 13% return is all we need the stock to rally to get back to break even. The other thing I'll do, we've also sold this 29 put, so I'll just take a quick look as well. If we end up getting assigned there as well, which we might based on the current price, that will be our total cost basis divided by 300 shares, which will be a $32 average cost. And then if we add in or subtract out all the option premium and dividends, our net cost basis is going to be all the way down at 30, and we're not going to need much of a rally to get back to break even in that case, still about 10%, 11%. So that's a little calc that I do as well. So we're generating lots of option premium, lots of dividends, and we're just waiting now for the stock to recover. So trade's not working so far. I wanted to show a good example and a bad example. I'm confident that this one will bounce back eventually. And if we can get back up to 30 to 33 and ideally 35, we're going to be looking just fine on this one. If you want to download this tracker, I'll drop a link below. Hopefully it will help you out. It's a really nice way to track individual wheel trades once they start to get a little bit more complex with a few more steps. So highly recommend you check out the template and also OptionNet Explorer. If you've got any questions on anything covered in the video, please just reach out. Otherwise, have a great day.